Sometimes you lose some trades and you'll be wondering why you lost that trade and you have not been able to find any probable cause to it. And it could be your funding rate, and that's what we are about to talk about. And many of you have seen this image before, and that is funding rate. So funding rate is a small fee traders pay each other in perpetual futures, and this is just between the traders. This is down to maintain the price between the spot traders and those involved in futures. So if the funding is positive, those in long position will have to pay those in short position, and if the funding is negative, those selling must pay those buying. Then the question is why, and why is this actually happening? You guys are already aware that perpetual futures never expire, unlike the quarterly and other ones that expire within months or weeks. Exchanges are using funding to keep the prices close to each other, so you don't go to another platform or you go to spot trading and then you have BTC at 67,000, while in futures it is at 70,000. So they use funding to maintain the price between the two different systems, so the prices do not change. And because of this, whenever there are too many longs, funding goes positive, and whenever there are too many shorts, funding goes negative. Now, another question somebody might ask is, how do you pay this funding, or how is it deducted from your account? So this actually happens at a fixed time, and most exchanges do it every 8 hours, or some other ones do it every 1 hour or every 4 hours. And you should remember that you only pay when you are still in position at the time of adjustments. But one other question is, can I also get paid when the market is positive but I am selling during that time? Then the answer is, you are right. You are not always the one paying. Funding actually works both ways, so it's a good thing and then a bad thing depending on which side you are at the time of the adjustment. So just know that the longs get paid when the funding is negative, and then the short get paid when the funding is positive. Now let us see what this actually means in an actual calculation in a real world. Let's see what this does. So imagine I have a position size of $5,000 and then I have a funding rate of negative 0.491%. What I will do to get my funding payment that I will be paying, or they'll be paying me, is to multiply my position by my rate. So we'll convert the negative 0.491% to decimals. So we multiply the $5,000 by our decimal, and then with that we are getting $24.55. So let us imagine you are paying 3 times, which is the adjustment will be every 8 hours. So you are paying 3 times within a day. That means 24.55 times 3. You are actually paying $73.65. You are either paying or they are paying you at that time. Now, a question somebody will ask is, if I'm already in a trade and then this is what's going on, what happens? So you should know that the funding is charged while you are in a position. So if you are long, the funding is positive, you are paying funding. And then if you are short and your funding is negative, you are paying funding. So it does not matter if the market has moved or not, you are still actually going to pay when you have money inside your account, or when the time for the adjustment is right. You are either going to pay or you are going to be paid. One other thing you must know is that even though it comes in lower percentages, you should know that when you multiply that by getting your funding payments, you are actually going to pay bigger money, because even if it is low or the funding percentage is even 0 or negative 0.491, you see how much you are paying. So it may look like small money, but when you multiply that by the amount of adjustment you are getting within a single day, you see that you are going to lose a lot of money, whether you are making money, you're trading or not. Another effect that it might have on your funding is that it can actually turn a winning trade into a loss. So let's say your position is slightly profitable, not much, but after deducting all this funding, imagine the money they are taking from your account, that can actually erase your gains that you have already made from the market, and even turn your trade into negative by making you to even lose that trade at the end of the day. Now, one big question that somebody will ask is there any way that I can avoid this funding, or will I actually avoid paying this funding? And then I've got 5 different ways that you can actually avoid it. So funding can actually take away your money, but when you take these ways that I'm about to show you right now, you'll be able to avoid it in many ways. The first way is to use limit order. So you don't have to just enter the market whenever you like. So you have to have limit order. You have already made your research, made your analysis and every setup, and you are just waiting to enter the market. So you set limit order for you to enter the market after the adjustment or after the funding rate. So on major exchanges or many exchanges that I've worked with, they already know or they already show you when the adjustments or the funding rate will be taking place. So you can have that time, have your setup, and then you set your limit order that is the time that I want to enter the market. Another thing you need to take note of is the funding. Whenever you are about to enter the market, check the funding before you enter. If it is too high, maybe you might decide to wait so that you don't end up being in the bad position at that time. Also, reducing your position size is another way to limit how much you lose from this funding raise. So you can reduce your position size and wait for the funding adjustment to be over, and then you add more position so that even if you should or money be reduced from your account or deducted from your account, it will be less. That's one way you can avoid this or lower how much you lose when this adjustment happens. Now, the fourth one that I have for you is the ultimate one. You close your trade before the funding time, and then if that happens, you have completely closed the trade, whether you are in a profit or you are in a loss. You close it to avoid the adjustment. But when you think the money that will be deducted from your account is not much, you keep your trade, or you may decide to close it, as I am already saying. So that's very cool. And then another fifth one that I have is that you actually check the extremes, whether the market is in a long position or in a short position. When more people are buying or more people are selling, you know the position of the market before you know which side you should go, or you decide whether you wait for it or you enter it and cross the adjustments with everything together. Another question somebody might ask is, does this actually matter, or the funding, is it so important? The one thing you must know is that this thing is more than a fee. It shows the market sentiment. It shows you what people are doing at that moment. So when, as I already said to you, high position funding means there are too many longs, and then high negative funding means there are too many shorts. So it tells you whether more people are buying or more people are selling at that moment. You'll be able to know, and by doing that, you'll be able to know the course in the market. You'll be able to know the signal and also the market mood. You'll be able to see what is happening at that moment. You'll be seeing whether you are going to lose money or not, or you are going to be deducted, or you are going to get paid. You'll be able to see all of these things and also know whether more people are buying or selling. So that's actually a cool one. So I will just end it here, and then if you have any other topic you want me to explain, drop it down in the comment section. Also, if you are new to our channel, make sure to subscribe to our channel and also drop a comment, and I'll be very, very glad. If you are new here and then you haven't subscribed yet, make sure to go ahead and then you subscribe, as I bring you more interesting and educative information just like this one. So see you in my other videos. Shalom.